Where does a barber go when he needs a barber? Well, the same place a bank goes when it needs a bank, the Federal Reserve. Okay, maybe not the barbers. The Federal Reserve, or the Fed, is a central bank, which is a fancy way of saying that it's the official bank of the American government. As such, it sets the bar for how all banks operate and helps keep the economy on track. Arguably, the Fed's most notable power is the regulation of interest rates, like what you hear about on the news. Changes in interest rates go along with America's economic health. Rates go up in good times and down in bad times. However, they're not talking about the APR on your credit card. They're talking about how much interest banks have to pay when they borrow money from other banks, the federal funds rate. Why do banks need loans? Sometimes their cash reserves dip too much from daily business. To make up the difference, they borrow the reserves of other banks. Think about when you were a kid. Say your mom and dad each have $20 in cash. You ask your mom for her money so you can go see a movie. She gives it to you, but it means she's out of cash for the day. Later on, your parents order pizza. When the delivery guy shows up at the door, your mom asks your dad for $10. Your dad willingly forks it over because he knows that running out of cash is just part of parenthood. This makes everyone happy. But now imagine if your dad only agreed to give your mom the money if she paid him $25 tomorrow. In that case, she might not have been so willing to order the pizza or give you the money for the movies, which means that money wouldn't help feed the local economy. It's the butterfly effect. This is why the Fed keeps interest rates low in times of economic recovery. Being incentivized to borrow means being incentivized to spend. So if low interest rates are good for lending, why would the Fed hike up rates? In a healthy economy, people don't need to borrow in order to spend. Looking back on our little scenario, maybe you don't ask your mom for $20 because you have a job and can pay your own way. That's the Federal Reserve in a nutshell. It basically exists to make sure things don't get out of control. You know, like how I am on the dance floor. Fine. Not supposed to do that. You're still here. Well, if you're looking for more, just subscribe to Mashable's YouTube channel. Then you won't have to miss any of my awesome and handsome explanations. One click.